Shares of Lehman Brothers have fallen 12% in the last week, accelerated by the critical words of David Einhorn, president of Greenlight Capital. Now, a CNBC exclusive to lay out what he sees as the problems with the firm and why he's shorting the stock. David Einhorn joins me right now in the studio. David is also author of Fooling Some of the People All the Time. Good to have you on the program, David. Thanks for joining us.
Thanks for having me on.
First off, congratulations on the book. The book is out early May.
Yes, it's been very exciting.
Why'd you write the book?
I wrote the book because the story within it was so surprising to me. And I think it's a very important story that extrapolates beyond the narrow topic, which is allied capital, the principal subject of the book, and talks about a broad phenomenon that I think is existing in the market, in the regulatory system, in the way analysts act, Wall Street acts, and investors act.
Let me ask you that with regard to Lehman Brothers. You made a speech last week. The stock of Lehman has fallen more than 10%, as we just said. Since your speech was made, what are your problems with Lehman Brothers right now?
Well, I don't know exactly what the story exactly with Lehman Brothers is, but I do know that when they reported their first quarter, the setup for it effectively was a couple days after Bear Stearns was bailed out by the Fed in the J.P. Morgan sale, Lehman had to announce their earnings. And they announced earnings that were very surprising to a lot of people. And it was they had a conference call, and it was fantastic. But about 3 weeks later, they filed their 10-Q with the SEC, and it had a number of disclosures in it that were, broadly speaking, inconsistent with what they said on their earnings conference call. And so I called up and I confronted Lehman's management with the various discrepancies, and they haven't been able to provide credible answers. So
let's go through a couple of those, what you call discrepancies, because as I understand it, within the firm, they feel that, in fact, there are inaccuracies, misinformation in the market as a result of your speech and other people betting against the firm. You made a call that the company has $6.5 billion in CDOs. Apparently, it's not CDOs at all. In fact, it's not mortgage-related assets. Are you aware of that?
Yeah, when I spoke with Aaron Callan about this, it was very clear to everybody on the phone call that it wasn't mortgage-related CDOs. But nonetheless, it was CDOs or synthetic CDOs, and she personally confirmed that to me on the phone call prior to me making the speech.
You're saying she confirmed to you that it was CDOs. I've also spoken with her. She's been on this program, and apparently they are talking about that inventory being other asset-backed securities, meaningful exposure to residential leverage loans, other things away from the mortgage market.
Again, there's no dispute as to whether there's mortgages or not. We all agree that there are not mortgages in the CDOs, but you can have other things in CDOs, other types of pools of asset-backed credit cards, restaurant franchise streams, and so on and so forth. And those things can be packaged into CDOs. That's what I asked Aaron Callan if they had done, and that is, in fact, what she confirmed to me on the telephone.
Okay. Apparently, we really need to get to the bottom of exactly what that portfolio looks like, because the word CDO, when you throw it around, has become a dirty word, and it looks like there is assets on the balance sheet that do not have a market, that are this bad securities, and in fact, the firm is saying that it's not.
Right. The very bottom line here is that CDO is a packaging. It doesn't refer to what is inside of the package. Now, all CDOs fell materially in value between November and February because spreads blew out across the board for all kinds of credit, mortgage credit, but also lots of other kinds of credit. And Lehman's portfolio of CDOs, a quarter of which is below investment grade, they wrote down by a total of 3% gross during that period, which is not a credible write-down in my estimation. And in fact, I asked Aaron Callan about this, and she said, I see what your point is. Let me get back to you on that. And when she got back to me, her response really was, well, we're going to write them down more in the next quarter. Mm-hmm. So the bottom line here really is that there's been a package of CDOs that took a very trivial write-down, and the company does not have an explanation for why they took such a modest.
But could it be that they needed to move some assets from level 3 assets to level 2 assets because there was so much activity in the quarter, and actually there was more transparency on that line item, and that's why they actually moved it? And by the way, I don't really hear any other firms even making an estimate on what the asset-backed securities are in the portfolio.
Right. Well, there's not enough specific disclosure from Lehman to know precisely what the values are. It really would be up to Lehman to provide much greater transparency as to how that went. It's interesting that they talk about this now as a new improved disclosure, but the bottom line is that for the last 6 months, Wall Street has been playing a game of who has CDOs. And I think it's very peculiar that the first time this $6.5 billion pool of CDOs was disclosed by Lehman was very quietly on page 56 of their 10Q, filed months after this crisis has started.
I'm just wondering, this is a specific situation where, after what happened with Bear Stearns, everybody's worried that we could see another collapse, another upset. And when talking specifically about Lehman, that's sort of what, the critics would like to claim. Do you feel a responsibility that what you say in the market, is going to be so significant that it is going to, impact the market value of the company, obviously shareholders? I mean, what kind of a responsibility do you feel to really ensure that you've got the facts right?
Well, I've done a lot of effort here to get the facts right. Every single fact in my speech I went to Erin Callan about, and I either confirmed or I tried to confirm. And in almost every case, they actually were confirmed. There were a few where she just refused to comment one way or the other. So I think I have a good responsibility to try to get the facts straight before I speak. But I think in terms of the broader impact of discussing this, I think it's very important for investors to be able to discuss stocks. I think it's important for them to be able to say good things about stocks and bad things about stocks so that you can have an open communication and the market can sort out who the good players are versus who the bad are and set asset prices appropriately.
So what kind of a scenario are you expecting to happen with Lehman Brothers?
Well, I don't really know exactly how it's going to play out. The future is uncertain across a wide range of
As far
outcomes.
as losses in terms of write-downs?
Well, I don't really know. There's not enough disclosure here to know exactly how bad the problems are. I think Lehman, through the crisis, continued adding leverage to their balance sheet where other people pared back to the point they were over 40 times levered as of the last quarter. And I think as you got to this last quarter that was announced in February, or at the end of February, I think that there's considerable reason to believe that the numbers that they reported didn't really reflect the full magnitude of the credit crisis as it was at hand at the time.
So how significant a decline in the stock are you expecting? You're shorting the shares.
Well, I do. I think that the risk-reward in the stock is poor from a long perspective, and so we are short.
And do you see any other issues with other firms as a result of these worries that you have specifically with Lehman?
Well, these are very specific worries. This is a question of what happens when you get right towards the cliff where Lehman may or may not have been right around the time of the Bear Stearns bailout. And the question is what incentive is there for companies to tell the truth? Or do you reward behavior where you don't come clean?
Well, final question for you is, what do you say to someone who might say, look, you're cherry-picking the financials of this firm, and you're doing so, dropping information in the market to serve your own best interest because you're shorting the stock, and you may not actually have the facts because other people are telling me the opposite of this. Now, I don't know. Obviously, we get the quarter and the numbers in another 2 weeks.
Well, there's two things about the cherry-picking comment. The first is it appears to me that the company doesn't want anybody actually going through the 10Q. They just want you to listen to the earnings release and the conference call. The Q comes out later, and they seem to be upset that I've raised, valid questions about it that they don't really seem to have very good answers to.
All right, we'll leave it there. Congratulations on the book, David, and thanks very much for coming on the program and explaining this to us. We appreciate it.
Thank you.
David Einhorn.